Just wanted to say hi, everyone, again. My name is Armine. I'm with Keller Williams here in Glendale. I just want to, make people feel as comfortable and as empowered through knowledge and confident to make the move because we are hearing so much noise, on the news, all around, neighbors, family members. There's just so much noise. And we want to cut through that noise and help you guys make the best decision for your family and for yourselves. So that's why tonight's webinar is called Buying Home Without Losing Your Mind. And we're hosting it with David Garcia. Thank you so much, David, for joining. He is a mortgage expert with over 20 years of experience. He's dealt with every type of buyer in every type of market. He's done it all, seen it all. And so I feel like he's a very, very trustworthy person to help answer some questions. At the end, we'll have an open forum for questions and answers. So if you guys have anything that you want to ask, please hold off and then we'll hopefully get that answered for you guys. And if you have a question, just put it in the chat. We'll answer that as well. This is a very loose, very, conversational kind of webinar. And so let's get started. The very first question, David, I hear all the time is what is the first step into buying a home? What should they do in terms of the loan side?
Well, thank you guys again for joining. Again, David Garcia, I'm with Walt Mortgage Group. So the biggest question that we have, and the most important one as you're trying to buy a home, is to understand how much you could afford. And I want you to hear how I said that you could afford. What you can afford and what you qualify for are often two different numbers. And most lenders, and you go online, TikTok, Instagram, you look at videos on YouTube, they don't talk about that. They talk about qualification. That's no. Number one is you don't want to be house broke, right? So what that means is you use all your money to pay a mortgage or your housing, and then you're left with nothing. Even though you bought the place, you may not have enough money to live on. So step number one is going to be figure out what is your budget. So what I mean by that is, for instance, if you're going to pay rent and okay, I'm going to pay $4,000 a month in rent, you still have your cable, gas, utilities, cell phone bills, everything else, but to live, you're going to pay 4,000, right? Start preparing yourselves to understand how much can you pay, right? This is including of property taxes, insurance, HOAs, no HOA, PMI, no PMI, all in what that payment's going to be. Because that's going to help not only your realtor partner, but the lender understand how to qualify you. But that is like the key takeaway from everything is to understand your personal budget.
Yeah, and I think that's very key, especially now because with a little bit of a shifting market, people are still trying to figure out what they can afford, what they can buy, but they're looking at homes, and I see this so often because, I'm there at an open house and I'm meeting buyers all the time who really just feel stuck because they are not prepared. They don't have a plan, and they're just going from one open house to another, and really without any, foundation as to how to move forward. Um, another thing that I think stops a lot of people is the fact that they think that 20% down is a must, and it's something that they have to do in order to be able to pay a lower amount and not pay the PMI. And there's like an entire kind of not a fear, but a hesitance towards those kinds of things. So can you help break down some of those myths?
Yeah, so that's one of the biggest myths. One of the myth number one on that front is going to be that you need 20% down to purchase a property. Understand that you could purchase properties with as little as 3% out of pocket. So with the 3% down payment, you're able to purchase a property, right? So if you envision a triangle, okay, as you as a homeowner, there's three pieces. It doesn't matter whether you're talking to Loan Depot or Office Depot, right? It's Bank of America, Wells City, Chase, myself. It doesn't matter. Point one is going to be your budget. How much can you spend monthly? Point two is going to be how much do you have available for the down payment and your closing cost. The third point is going to be the price point. Understand that from a lending perspective, if we have two of those pieces, we can come up with a third. If you tell me, here's David, here's the payment that we want, here's how much money we have to put for the down payment and closing costs, we can calculate what your buying power is. If you want a certain price home, you want this payment, I could tell you how much of a down payment is required, right? If you know how much of a down payment and the price point you want to get to, then it tells us what payment you're going to have. And there's a question, the 3% down is and this is for twofold. There's two types of loans that you normally get. Okay, there's going to be a conventional loan, which are Fannie Mae, Freddie Mac, and FHA. So for a first-time buyer, okay, a first-time buyer, if you've never owned a property or you have not owned a property within the last 3 years, you qualify for a conventional loan with as little as 3% down. FHA, whether you're a current homeowner, first-time buyer, the minimal down payment for a property is 3.5%. So the key factor there, though, is obviously the higher the loan amount, the higher the monthly payment. But having to put 20% down is not a requirement. Recently, it was announced with the new bill that got passed is that understand that PMI, HOA dues are tax deductible. And the increased amount of money that you spend on your home that you could write off annually has also been increased. So if you're buying a property, you have interest, property taxes, HOA, PMI, you would probably be able to write off more than your standardized deductions when you do your property taxes, which in essence helps you pay less in taxes. And there was one more question that just came in. Hold on.
It says if I have another house, but the purchase date was past 3 years, I am qualified to get a house to put down 3.5%.
If you do own another property, okay, now here's the big. If you do own another property, as long as it's not, the 3.5% is an FHA loan. Okay. If you own another property that is not FHA, then the 3.5 is still allowable.
Oh, as long as the first home was with a conventional loan.
That's with the conventional loan.
Right.
The reason being is that if you have an FHA loan to an FHA loan and you're like, hey, I'm going to rent out my home, a caveat within FHA financing comes into play that makes it a little tougher to put only 3.5% down and carry two FHA loans. It's
Mm.
doable, but it makes it difficult.
What would someone who is, trying to fix their credit score, because there was a lot of also conversation around FICO score being too low and people trying to get better options. Do they have to wait months before they're able to actually get a decent loan? Or are there other ways around that?
So know that you can purchase a FICO score. That's a great question with as little as a 580 FICO score. Understand that life happens, right? It happens to us all. So things happen. That doesn't necessarily mean that you're a bad person, that you are not financially responsible. Just life occurs. It happens to us all. So you could purchase a property with as little as 3.5% down with a 580 and above credit score. What we offer to do at no cost or obligation is we can run a credit score analysis for you to let you know if you're not in a position to maximize your buying power, or if you do want to increase your credit score, we could actually let you know here within the 93 to 95 percentile accuracy rate, here are action items that you need to do in order to qualify and get your FICO scores higher. A question that just came in, down payment assistance, absolutely. Know that there are state, county, and LA City um, down payment assistance programs. Now, I would tell you that about 95% of most down payment assistance programs are silent seconds, meaning there's second liens on the mortgage that do not have a monthly payment, but they do have to be repaid if you are to sell. There are forgivable grants that are available, but those are very few and far in between. To qualify for them is fairly tough. But in a sense, there are programs statewide, countywide, citywide that'll help for your down payment and your closing cost.
The other question that I get a lot is what does it actually cost? Because, a lot of times people have just enough to put the down payment and that's pretty much it. And then there's like closing costs, things like that that are sometimes not factored in. It would be helpful to know, what does it actually cost to buy a home? Oh, sorry, David, you're muted.
So your closing cost, okay? The closing costs normally are about 2.5% of the sales price. That does not mean that that's, oh my God, that's the lender fee. No, when you purchase a property, there's multiple parties that help in the process. State of California, you have a title company, escrow company, notary, county recording, per day interest, your first, the prorated property taxes, the first year of your home insurance, and the lender fee. If you put that all together and you calculate it, it's going to equate to roughly 2.5% of the sales price. That's just an industry standard. There's a lot of times that you see online that they're like, oh, a closing cost to buy a home is only $3,000. Know that there's no state or federal mandate that says that for a certain price home, a title or an escrow company can only charge a certain amount. Every title and escrow company charges differently. So the only time that you're going to get concrete numbers as far as your cost is once your offer gets accepted and you open escrow. But understand that all of that is transparent, that within the first 3 to 4 days after your offer gets accepted to purchase a property, you will be disclosed all of the fees that you have to pay.
And I know that there was something exciting you told us about when we met last time, about possibly getting those fees covered through another grant through the FHA. Can you tell us about that?
Yeah, so there is a state grant. It's called Cal HFA. If you want to look it up, that's CALHFA, California Housing Finance Authority. Um, they have a two-part grant. The first is a down payment assistance. So they offer 3 to 3.5% for your down payment, but they also now have a piggyback option in which you could have 2 to 2.5% for your closing costs. So in that scenario, if you're buying a $500,000 property, you might be able to purchase a property with as little as $5,000 total out of pocket, and you're a homeowner because your down payment and your closing costs are covered. So these are options that once we have the consultation with you, which is at no cost or obligation, and understand what you're trying to do, we will navigate with you all of the available options based on your income, credit score, location that you're trying to buy, in order to help facilitate your path to get generational wealth and become a homeowner.
From the questions that was asked by Natasha was, are there any specific loans for teachers and other niche professions? I know that.
For teachers, first responders, there's a secondary grant program called GSFA. It's a state grant, Golden State Finance Authority, that offers the GSFA Platinum for a first responder teacher or anybody that works at schools. They offer a 5% down payment assistance that's forgivable. Now, these programs, there's a certain amount per quarter that they allow. That as we will work, if you get pre-approved, we take a look to make sure what's the availability of funds, but understand that after 2 years of living in the home, making all your payments on time, they have an option in which the grant that they give you does get forgiven.
Oh, that's amazing. Another question Sam had was, what's the price range that you're talking about when we receive these type of assistance? So there was a cap, right, for earning.
Well, look, it's all going to depend on the qualification, the debt to income ratios. So you could purchase a $800,000 home, $750,000 home with as little as 3% down. The question then becomes is, do you earn sufficient income to qualify for that amount?
Yeah. So each individual case needs to be looked at and looked over. And Sam's asking, in my case, it's over 1.7 million,
If you're trying to
the
buy at that
price.
price point, depending on profession, there are programs available to you that you could put as little as 10% down with no PMI. So that's one, but your income would have to qualify. I'm not licensed in Georgia for Natasha, but there are members of my office and my team that are. So we could definitely finance a property in Georgia, Nevada, Texas, Arizona, and Florida. So if you have anywhere there, we'd be able to help finance you.
What other loan options exist for self-employed or 1099 or earners?
So the other, one of the myths that is out there is that you need to have a 2-year work history with tax returns in order to qualify. That's not true. If you're self-employed,
Like
and
me.
right, if you're self-employed, there are options in which you could use 12 months of your bank statements, deposits to qualify. You can have your accountant CPA prepare a profit and loss letter. You can have if you work in the entertainment industry, if you're a realtor, someone that gets paid 1099 as an independent contractor, you could use just your 1099s to qualify. So there's more avenues in order to help buyers, families position themselves to purchase a property without requiring the actual tax returns. It's just making sure that there's a way to prove the income that you're earning and to qualify.
Another thing I hear a lot is when they're trying to get pre-approved, some people are kind of hesitant because they're still trying to figure out where they stand with their income, things like that, and they don't want a hard credit pull. So is it possible for them to get some kind of an idea of what they're pre-qualified for and put a plan together without having to do that?
Absolutely. What we normally do for families is we do what's called a soft credit pull. The soft credit pull is not a hard hit, it's just a view of credit. Issue, we as lenders cannot issue credit on a soft credit pull, but it gives us it's real-time data that allows us to know your current debts and the FICO scores, right? There is a difference between if you have lower my bills, your credit card, credit karma, credit scores versus a mortgage. So anything that you get from there's like 3 layers, 3 tiers. With your credit cards, companies offer that's the lowest tier. They really don't look at your trade line history. Okay. The second tier is if you take out a student loan or an automobile. The last tier is the mortgage. We look at the last 8 years. What happens is that we take a look at everything to see what's available, what's there, and we provide one, what your current credit scores are. The second part of it, if needed, is we provide solutions to increase the credit score and get yourself better pricing and a better loan.
Um, I wanted to ask another question that was a little bit more towards the market that we're in now. So rates have been kind of all over the place. Everyone's waiting and waiting and waiting, hoping that it will keep going, lower and reach a level where more people are comfortable. I mean, I think it's a little bit of um, maybe a long shot to think we'll get so low where it would, make sense for someone to, let's say, sell their home that they bought at 3% to buy a new home at a higher rate. But what are you seeing out there? Are people stuck where they are, or is there sort of a light at the end of the tunnel for those who um, look at the rates?
So look, nobody has a crystal ball. Okay. The one thing I tell people, and this is the wholehearted truth, is when asked when should I have bought a home, is it a good time to buy? The best time to have bought a home was yesterday. Okay. As funny as that sounds, is it's not for anything but data. In LA County, Southern California, there's no more land to build. All the jobs are centralized. So based on that, there's you're not gonna whatever is available now, that's it. You're not the only other thing that people are doing. You see investors buying single family homes, tearing them down to put on multi units, right? That's the only way to create housing. So if you're able to purchase a property today, it's one of those get in while you can, because the one thing that we don't have is additional land. You are going to maybe have to work or buy in the outskirts of the metropolitan area in order to get new construction. But if you're able to purchase somewhere within LA County, close to home, close to schools you want, XYZ, now is the time. Because what's going to end up happening, as you mentioned, the volatility in the market is going to end up causing, as rates go down, it's going to drive prices to go up because what's available is all that's available. Instead of
Yeah.
having to compete with one or two families, you might end up having to compete with three or four, or five or six. At that point, it becomes gladiator where everybody's out for themselves and whoever can offer the most will win.
Yeah, and we'll go back to bidding wars again, where buyers are constantly competing, driving the prices higher up. And we talk about that a lot with some of the buyers that I sit down with, and they because we're kind of short-sighted and in this moment, we don't see that no matter what, we're still in a church in a going high trajectory. We're still going this way, no matter what. And so if you're in your home for about 5 years, even if, you have to refinance at some point, you are still gonna have equity in your home 5 years from now. You're still gonna build that wealth. You're still gonna have that opportunity to build that wealth. So, we always tell them to look kind of into the future. And if you're able to right now, only if you're able to right now, comfortably, like you had mentioned before, what can you afford? Um, you know, don't wait because then it's gonna become even harder to get that same home. Like 5 years from now, you're not going to be able to afford that same home that you were able to afford now.
And here goes the other question to everybody here, whether you're a first time buyer, secondary investor, whatever. If we don't know what we don't know, okay? A lot of times there's a lot of questions that you have. Um, the only way to answer them correctly, right, is to set up a consultation. There's a fear from it where it's like, no, I'm going to get pushed. I'm going to XYZ. Listen, I've been doing this for over 20 years. What I've learned, two major facts. You can't make a decision on information you do not know. Number two, if it doesn't make financial sense for you, you're not going to do it, right? After looking at the numbers, if it doesn't make sense, you're like, cool. But what the buyer consultation will provide you is a transparent understanding of where you're at today, where potentially you need to be, and a roadmap to get there. I could tell you about 50% of my business is from families that I've spoken to for about a year. We set up game plans. There's a question about paying off debt, right? Um, without sitting down and doing that consultation, I've always looked at my consultations as complete financial analysis, right? Because with the down payment assistance programs on a $500,000 home, $250,000 home, that could be anywhere between 15 to 10 to $15,000 in assistance. If you have that, but you're thinking, well, this is all I have, but I have debt. Well, this is where you leverage the assistance to cover the down payment portion. You use your liquid cash to pay off your debt. Now you just created cash flow monthly. But you wouldn't know that unless we have a consultation. And if I were to answer questions on phone calls blindly, I'm potentially leading you down the wrong path. That's not what this is about, right? Um, you're going to make, once I believe the more information that we can give a family or consumer about their particular situation, they're going to know what's right for them. So all of that begins, it starts with the consultation and setting up the game plan. In the best case scenarios, after the consultation, great, let's go look for homes. In the not the best situation, it's going to be like, hey, look, here's where you want to be at. Here's what you need to do to get there. But there's a game plan behind it that's structured to let you understand what your action items need to be to get you to where you want to be.
Yeah. Thanks, David. I had one other question. I remember you spoke about this, and this might be very specific to your company's capabilities. It was regarding um, if they do end up buying at a higher rate and they need to refinance, you had a program in place that would make it less risky for them. Can you tell us about that one?
Yeah, so what we offer to do is our buy now, refinance later. We understand nobody has a crystal ball, but industry wide right now, there's an understanding that rates are going to come down. So understand that you could always renegotiate the interest rate on your mortgage at a future date. You cannot renegotiate the sales price. What I mean by that, if you're able to purchase a property today for 500,000 or 600,000, let's just say 600,000 today, when rates go down in the future months, if you bought today, you'd be able to renegotiate the interest rate from the current market rate that you got to whatever the market is at the bottom. But you're not going to be able to talk the seller into negotiate to sell you the property at 600 when the properties are being sold for 650, right? So what the the flip side to this is that you're going to end up paying more for the same price home in the future, which is why what we've offered to do is the no cost refi, meaning that there won't be an appraisal fee, there's no lender fee. We would do our best to cover your title and escrow fees. So all you're doing is restructuring the debt with as little to no cost as possible and getting the lower rate, lower payment.
When would someone be able to do that? Is there a time limit? Is there a time frame?
Any loan that's backed by the federal government, so that's FHA, Fannie Mae, Freddie Mac loans, you could do whenever. There are no prepayment penalties. You're free to refinance whenever you see fit. Most of the time, they tell you 6 to 7 months. It's as soon as the market gets low enough where the payment savings is sufficient to you and your family, do it then.
Are there any new programs coming out that we should be on the lookout for?
Well, the Cali FA, the Dream for All, that is the big one. That's where they were. If that one was a lottery, it was a draw in which Cali FA, the same grant that offers 3 to 3.5% down was offering up to 20% down payment assistance. That they're restructuring it. That might be coming out early 2026 again, where they're going to offer $120,000 or 20%, whichever's less. But that's a large amount of money that buyers can get a hold of if you're looking to purchase the property in unincorporated LA counties. There's a grant right now. It's called the LIPA or the MIPA, limited income or moderate income, where the city of Los Angeles offers up to 160,000 for down payment assistance. So these are options that most families don't know are available, but we could work with you to see if you qualify and set you up so when the grant is available, you could take advantage and go house hunting.
Right. And it's always about preparation, I feel like, right? When you are prepared, you don't miss out because a lot of these lottery-based ones run out really quickly. But if you didn't even have it on your radar, you didn't even know about it, by the time you find out, it's probably too late. And that's what happened previously. They would just run out of money so quickly. Most people, the Dream for All, right, it really didn't help them much. It wasn't something a lot of people were able to take advantage of versus things that are more readily available, especially now the Cal FHA that you talked about before the loan, um, which is it's not on a reserve. It doesn't like um, run out. So that's a little bit more consistent. But having a plan in place and having an idea of what would work for you and your situation would probably be beneficial.
Most families that we help now, after doing the consultation, are placed in a better position than they thought. This is the truth. But again, you don't know what you don't know, right? There is no hard credit pull that'll be done. Uh, you don't even have to bring your documents as long as a simple conversation that's going to happen because with the data that you give us, the information that you give us, I would be able to pre-qualify you, let you know here's what the payment's going to be. Here's based on what you're telling me your credit's at, your income. We could have a base as to where you qualify with. Obviously, if the numbers that you present to us change, then our numbers would change as well. But with the understanding that everything is on the up and up, you would have a better sense in understanding of what you qualify for. And that's stage one. Because I've had a lot of families that didn't think they could qualify. And within like 2 weeks, they were already on the market looking at what they can get based on the income, based on the power that they have as buyers, and opening escrow when they didn't think it was possible.
And with the shifting market in our area, and every market is very different, even city to city, area to area, it's a very different market, but we are seeing a small shift towards center. It was very highly sellers market for a very long time, and that's slowly shifting over to more neutral, a little bit more um manageable, I guess, market. Is that what you also do see, David?
I do right now. I think a lot of the families are waiting for rates to drop. They're like, oh, because everybody hears rates are going to get lower, rates are going to get lower. But what that all that's going to happen when that occurs is more families are going to come out. Your competition goes up. So in the market today, if priced right, we're still seeing properties sell within the first 10 to 15 days, which is still a lot faster than the average.
Mhm.
But with that being said, you're actually seeing right now, real time, you're seeing sellers offer credits that we normally didn't. Because if somebody's trying to sell their house, they need to. There's something that they either have to relocate for whatever reason the sale has to occur. Take advantage of that. Because again, as soon as interest rates come down a little bit, you're going to see everybody come out and try to qualify. Last year, when the Dream for All, the Cal HFA, the 20% down payment assistance program came out, rates were in the sevens, but over 18,000 families statewide applied for a grant that only offered 1,700 loans. 18,000. That's letting you know that the market needed a spark. They needed a reason to come out, and that down payment assistance was possible. The majority of those families are still waiting. Now they're waiting for rates to drop. So right now is a great opportunity where sellers need to sell. As you mentioned, things aren't moving as fast, but it's an opportunity to secure your property today, potentially get credits, and take advantage of the growth in equity when it occurs because you've already bought at the lower price points.
Yeah, it's like a sweet spot, right? It's right before it gets to be a similar market to where everyone was outbidding each other. But it's just that right sweet spot so that you have enough inventory. We are seeing homes stay on the market a little bit longer. But like you, David said, if it's the right property price at the right price, it's still going pretty quickly. But there are more and more properties that are staying a little bit longer, so inventory is up a little bit. And so it's like a little sweet spot. So you do have more options, and as buyers, you do have a little bit more um, control. We had an agent who was just in a escrow that the seller credited the buyer the closing costs because it was the best thing to do to make that escrow go through. But it does show that buyers are having a little bit more impact and have a little bit more buying power. And so this is a great opportunity to look into and see if it's the right thing for you to do and get yourself into a home. Are there any other questions that you guys have in the chat? I did post a Calendly link for a 30-minute buyer consultation just to explore more. And I can also email that to you guys. This is also recorded, so if you would like to see this video again, I'll email it to you. Um, if there aren't any other questions, this is open, we're opening this up for you guys to ask, more questions. I know that Natasha had asked about paying credit cards off to better position a home, purchase a home. I think that would be another thing that you might want to talk directly with David because there would be probably a best way to do it, like best uh, option for paying off credit cards. Um, so I don't know if David, you want to answer that question or if it's better to have
Well,
that covered in a
look,
person.
as a home buyer, understand this. There are way more opportunities today to be able to purchase a property, regardless if you need down payment assistance, closing cost assistance, if you're self-employed, if you don't have the best credit. Now is the time because there's so many loan options available. It all starts with the consultation. To Natasha, like yourself, it really would take just a consultation to understand the scope of the financial picture in order to help guide what would need to be done to get you where you want to be. Because paying off credit cards depends on how much money you have, right? Because you do need some funds to purchase a property. If we're going to pay off debt, then maybe some down payment assistance options may be needed in order to allow you to pay off the debt and still be able to purchase a property. Everybody's situation is different. So what we try to do as a team and myself is to customize every loan to meet that family's situation, right? So it really is going to depend. How do you report your income? The tax returns, job history, credit, debt, monthly payment, available funds. It sounds like a lot, but once we sit down, we can really just customize it to see exactly where you stand and where you need to be, and or how we can help guide you to get you where you need to be to purchase property.
Yeah, and on that note, I just wanted to say a huge, huge thank you, David, for giving us so much insight. There was a lot packed into these last 40 minutes. I want to thank you all for joining us, and hopefully you walk away with a little bit more clarity. Some questions have been answered, and that you see that there is a lot of opportunity for you and your family to not put off what you've been meaning to do. Um, Remember that you don't have to do this alone. We are truly here to help. David and I can put a plan together that you can use. If you're not ready now, you can use later. So this is our way of giving back, doing this free webinar just to, make this a little less intimidating, less stressful, so that you're not losing your mind when you're trying to buy a house. So the next steps would be, stay in touch with us. I will, I sent out the Calendly. I'll send out an email as well. Get pre-approved with David, and have a conversation with your family and see if this is the time to make that happen. We will have more webinars in the future, so I will definitely reach out to you guys and send you any other notes and preparation things that you could do to get ready for your buying. Um, Thank you so much again, and we will definitely send you guys the recording and notes. John, thank you for joining in. I know you popped in a bit late. It was wonderful talking with you guys. Thank you so much, David. I've definitely learned a few new things, and so I bid you all a good night, and we will meet again. Take care, everyone.
Don't forget, take care.